Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Thursday, October 16, 2014. Here's a daily chart of the SPY, and what do we have? Well, pretty interesting day. Let's take a look intraday just to get a sense of what happened. Okay, so here's a 10-minute chart, all right? And where are we? Okay. So here we go. Sorry about that. We gapped down at the open, okay, and then we went all the way down where the SPY went down to 182.89, and we never reached the low from yesterday, and then we bounced up. Now let me show you the daily chart again. Okay, so a lot of people would say, and I've said, and it's true, right? Once a market makes a low, you generally get a retest of that low, and on a successful retest, you can, have a new rally, whether it's a 3 or a 5 or a 7-day rally or a multi-month rally. Either way, usually you have a successful retest. Now, we didn't get that, and sometimes you don't get it. And sometimes it's fine. Only, so you start to look at other indicators. I always look for a tell one way or the other, whether it's the bond market, whether it's the small caps, whether it's something, anything. Whatever stands out to me, I just like to note it in my mind. So I'll go over a couple of tells. But I'm just in the camp that this was not a successful retest. And sure, we can go up for a few more days. I'm fine with that. I mean, we're nowhere near off the lows. And you know what? Now's as good a time as any. So what was strong today? Well, the IWM was strong, and that makes sense. It was really the weakest index since it topped out over here at 121 almost, okay, down to 103.5. Now, that's basically 20%, give or take. And, the S&P, Dow, we're not even down 10%. So from the highs, this has been certainly sold off more, so it makes sense that the oversold bounce would be larger. I'm not really going to make anything other than that of this. It was stronger today than the other indexes, and I'll give it that. That's fine. It's nice to be long something that's strong. I'm good with that. Only this is it's not giving me enough of an indication that all signals are clear. Let's go back to the SPY a second. Okay, so here I say that you had a reversal yesterday off the low, then you had what looked like a retest this morning right at the open. Overnight markets were down big, the retest at the open, and then a reversal. And what happened was, under normal circumstances, what does a true reversal look like? And by the way, it still may be ahead of us, maybe tomorrow, maybe Monday. But normally, you would see everything inflate up. And you would see everything that was oversold at least catch some kind of a bid. Well, Intel. Is Intel catching a bid? If the chart could come up? Oh, talking and typing. Unbelievable. Happens every single day. Okay. Intel, not much of a bid. I mean, sure, the supposed the capitulation low, if you will, yesterday wasn't really a capitulation low, but that's what we'll call it. Came into this gap window here down at 29.5, but to bounce only $1 after you sold off from 35.5, nah, I'm not buying it. Couple of Dow stocks, Altria. How many times in a row can this happen? Is that unbelievable? Okay, Altria. Down, just no bounce whatsoever. What else? I have a list of stuff. Oh, look at this. Goldman had earnings today, but, I mean, under normal circumstances, if the market is bouncing or at least finishes flat, you would expect Goldman to be somewhere around the flat line. It was down over $4. What else do I have on my list? Amazon. Amazon's been just taken to the woodshed, couldn't catch a bid. After hours, Google reported it's down at 5.25 after hours. Netflix we know about from this morning, taken to the woodshed. Made a comeback today, but it's going to go back down. So I'm not convinced the low is in. That's just my take. It's where I am based on what I'm seeing. Oh, here's another one. I showed you Intel, but the SMH, okay? The SMH was, where did it finish today? It finished up 32 cents. Okay, look where we are from where we were. The markets are bouncing, and SMH can't even make it to the 200-period moving average. You know, let's get a bigger picture of the SPY before we move on a second. One more time, okay? Just to get a sense. All right, well, we'll stay with the daily. Not even close to the 200-period moving average. Before a bounce is over, you're most likely going to retrace around to the 200-period moving average. In fact, you know what? I haven't even done this yet today. I can't do it on this chart. Oh, I keep forgetting that. Maybe it'll work. No chance. Okay. Never mind. All right. So anyway, I can tell you right now that would be somewhere in the neighborhood of slightly more than a 382 retracement just by eyeballing it. It's probably 50% is right here. So if it's a 382 is in this general vicinity, you could expect a bounce there from here. Okay. But I think there's one more low coming, and that's just my take. Instead of testing this low, okay, and here's the golden goose. Instead of testing this low, I think there's one more low coming. And it may not happen over the next day or two. I think it has a possibility, but before the end of the month or early November, before all signals are clear, before the elections, maybe around the Fed meeting at the end of the month, who knows, one more low. That's my take. And then there's going to be a nice bounce and a nice list of stocks to buy for nice gains. But there's no reason to get in front at this point in time. If you trade the markets, that's one thing. But if you want to buy something to hold it for a couple days to a couple weeks or a couple months, whatever it is, then there's no reason to get in front of it yet. It's not all signals all signals are not clear. Let's take a look at a tell on the other side. Meaning this is a tell that maybe the stock market did make a low. It's possible. It's always possible, right? Just because my work is telling me one thing doesn't mean I don't look at the other side. So here we have TLT. So here's the bond prices this morning spiked up. I'm sorry, this was yesterday. Spiked up again this morning, and then went down and finished close to the lows. And we, that was basically a retest. Okay, not a retest, but usually you get a retracement of about half of yesterday's move, and you got that this morning, close enough anyway. And then you sold off. And the point I'm making is that we know we're in the cycle, the type of cycle where when the stock market sells off, the bond market rallies, interest rates go down. And you saw that all throughout this sell-off in the stock market was a rally in the bond market, and then it looks like it's putting in a top. Okay, so the same thing applies. It's just the mirror image of the stock market, only I want to point out that there is a possibility that we did put in a top in the bond market. That's always a possibility. The other one is the VIX. And let me just bring up the VIX chart. Same thing. VIX chart looks a lot like the bond market. I mean, look where this spike went. Let's look at the weekly. And then we'll get to golden oil and we'll wrap it up. Look at this, up to 31 and then a pullback. That was this morning, okay? So it's possible. The market could have bottomed. It's definitely possible. I just don't believe it has. However, it's not like I'm going to have that stance for the next, 500 points in the Dow or 50 points in the S&P. If we close the week, okay, around, let's call it 1850 in the S&P futures, okay, above 1850 or above on a weekly close this week. That's a bullish sign. That's definitely the stronger position for me. Okay, finishing, and it's not like 1849 and below is bearish. I give myself a 5 to 10 point span because the markets are tricky. So really, like in the 1842 camp and below, that's bearish to me. So that's kind of where I am for a weekly close and what I want to see going into next week. But that doesn't really matter now. It's not important. Anyway, so let's look at gold. Gold didn't do anything today. We're kind of in this like melt away sell off, not a sell off, but we're just stalled out. This is the weekly. Let's go back to the daily. We're just stalled out. We hit my 1250 level in gold, and then we pulled back off that. That would coincide with this high here in GLD. Okay, 120 and change. So what do I think from here? Well, I think there are higher prices if we can get the right pattern to set up, okay? If we stay above this 20-period moving average, right down here around 117 in the GLD, okay, and we go sideways for a while, okay, then I think we can have higher prices. I think we can get up to this level at 122.5, 123, maybe even the 200-period moving average on the outside chance, okay? That's not high enough probability right now for me to take a trade, but I'm just telling you what the setup would be like. Otherwise, I think there's lower prices in gold, but they don't have to happen now. They might happen in a few months. But right now, this is where we are. We hit the 1250. Those that are holding it, you can hold it with a stop. Put a stop below, close below like 1230 in the price of gold, the gold futures contract. Coincide that with in here, close below the 20-period moving average, and that should serve you well. Let's go over to oil. Oil had an interesting day. So oil went down at the open. Let's look at an hourly chart. Oil went down at the open, okay, and reversed up, and then spiked right up to this 50-period moving average. This is USO. And then pulled back, but we're making a bullish pattern here. So if we can go sideways some more, we'll probably have another move higher. Okay. So I think oil, I've been telling you 82 was my number, and 82. Where are we now in oil futures? 82 was my number for a daily closing low. We even got below that. And intraday, we certainly got below that. But oil right now is 83.28. Okay, so we're off the bottom, and we'll see what happens. We'll see if this holds. If not, we'll address it. But I'm not all signals clear yet because it's going to trade with the market for now. That's all I have for tonight, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in. Another episode of Common Sense Market Analysis.